So thank you, Charles. Today I'm going to look at some of the reasons why you as a non-resident, particularly somebody living here in Hong Kong, would want to invest in property in the United States. And let me start literally with the big picture, and that is that the United States is a much larger market than Hong Kong. And here are a couple of statistics to help put that into perspective. America's population is 319 million versus just 7 million here in Hong Kong. That's 45 times larger. It's 9.8 million square kilometers. The US is nearly 9,000 times larger than Hong Kong. And in 2013, America's gross domestic product was 16.7 trillion US dollars, and that's more than 43 times larger than Hong Kong's 381 billion US dollars. For the year ended March 31st, sales of existing homes in the United States totaled $1.2 trillion. By comparison, total domestic sales here in Hong Kong in calendar 2013 were just 38 billion. So that makes the US residential market more than 31 times larger than ours here in Hong Kong. So the US is clearly much, much larger than Hong Kong. And that added size translates into 7 key advantages for you as an investor. The first is diversification. If you listen to the government propaganda, you know that Hong Kong has 4 official pillar industries, and those are financial services, trading and logistics, tourism, and professional and producer services. But in reality, Hong Kong has 1 pillar industry, and that's called China. The United States economy is far more broadly based than Hong Kong's, from agriculture and manufacturing to finance and high technology. The US is much able to better withstand economic shocks. And while Hong Kong has benefited immensely from the mainland's explosive growth, a slowdown in China or a loss of confidence would have devastating effects to Hong Kong's economy and to its real estate market. If you lived here like I did during SARS or the Asian financial crisis in 1997, when some home prices dropped by 2/3 overnight, you know what I mean. Second, that scope means that you have a lot more investment choices in the United States. Residential property in Hong Kong, for the most part, means buying small apartments. In the US, you can buy a multi-million-dollar trophy apartment in New York City, an apartment building in a city like Youngstown, Ohio, that's benefiting from the economic boom that's going along with fracking, a home in a gentrifying neighborhood like Ballard in Seattle, and much, much more. Your options also include financial instruments like specialist REITs, developer stocks, mutual funds, private equity, and so on. So you have a lot more vehicles besides just plain bricks and mortar to invest in. Third, your money goes a whole lot farther in the United States than it does here in Hong Kong. In July, the average existing home price in the United States was $269,000 US dollars. Compare that with $649,000 US dollars for a 431 square foot flat on Hong Kong Island. And that 431 square feet, by the way, if you don't live here, is Hong Kong square feet, so the net usable would probably be about 300. It's also informative to compare the United States with Canada, which is another popular investment market for people in Hong Kong. In July, the average home price in Canada was $363,000 US dollars. So American average prices are about $100,000 less. And if you wanted to buy a home in Toronto or Vancouver, which are 2 of the top markets for investors, you would be hard-pressed to find much of anything for less than $1 million US dollars. Fourth, the open and free nature of the US economy means that the United States continues to attract talented, ambitious immigrants from all over the world. In the year ended July 2013, the U.S. saw net international migration of over 843,000 people. And whether it's refugees from Latin America, Canadian snowbirds, or Chinese entrepreneurs, people are drawn to the United States, and that creates demand for property. Fifth, both buyers and immigrants are attracted to America's strong commitment to the rule of law. America's efficient, impartial legal system and the knowledge that contracts will be enforced is a vast improvement over the legal systems in many countries where corruption, bias, and delays are unfortunately the norm. And that's reflected in sales statistics. For the year ended March 31, 2014, foreigners bought 7% of the existing homes that were sold in the US market. And that translated into sales worth $92.2 billion US dollars. Increased international sales means that there are a growing number of sales representatives, architects, management companies, and other suppliers who are dedicated to meeting the needs of overseas buyers and very often serving them in their native tongue. Finally, as you may have noticed, I've given you a lot of data over the last couple of minutes. And that really highlights my seventh advantage, which is that the United States is among the most measured, data-rich societies on Earth. From bodies like the Census Bureau to the Federal Reserve, not to mention city governments, industry associations, startup companies, and let's not forget the NSA, there's more data about the United States, its cities, and its people than any other country on Earth. You can learn about everything from the local air quality to the rating of your neighborhood elementary school with a few clicks of a mouse. And if you're willing to invest a little bit of time, you can use this data to make better decisions and to learn from other people's mistakes. That data allows you to avoid threats and spot opportunities. And I'm going to close out my part of the presentation with a quick look at some of those threats and opportunities. Let's start with geopolitics. As you know, China has simmering conflicts with several of its neighbors, including Japan and the Philippines, and the United States has mutual defense pacts with both of those countries that could cause it to be drawn into a regional conflict. Russia's activities in Ukraine could have a similar effect in Europe by virtue of America's involvement in NATO. And the Islamic State of Iraq and the Levant, or ISIL, is a wild card in all of this that could influence everything from the price of oil to global shipping and day-to-day life in the United States, particularly if ISIL successfully carries through on its threat to stage an attack on American soil or to blow up the Suez Canal. At first glance, each of these problems is bad for the United States. But these threats will also drive people to move themselves and their money in search of safe havens like Switzerland and, I believe, the United States. And that would obviously be a plus for American real estate. Second, the United States is in the midst of a major demographic shift as the baby boomers, the people born between 1946 and 1964, enter their retirement years. There are two major issues with this group. One is that they've not saved enough for their retirement, and as they get older and sicker, they're going to be dependent on the United States government for help just getting by. The second is that about 1/3 of boomers plan to sell their homes to finance their retirement. Unfortunately, however, there are 10 million fewer people were born in the 20 years after the baby boomers. That means fewer first-time buyers on the bottom of the property ladder. In addition, Generation X has more than $1 trillion in student loan debt, and more than 10% of that is over 90 days delinquent or in default. If you're not familiar with the student loan crisis, if you declare personal bankruptcy in the United States, you can get out from under a lot of things, but you can't get out from under your student loan. So this is a millstone that these people are carrying around. That's acting as a major drag on the market. And furthermore, many of the members of Generation X and the millennials who followed them watched their parents get caught up in the subprime crisis, and that has made them adverse towards buying property. Incidentally, the effects of the subprime crisis are still very much being felt. At the end of June, some 17% of Americans with mortgages, or nearly 9 million households, were underwater and had negative equity. Third, many of the low to medium skilled jobs that allowed people with a high school education to buy homes and enter the middle class have migrated to China, Mexico, and similar places. And that's creating a society that's increasingly polarized between the rich and the poor, where middle class home ownership is threatened. You're going to see a growing number of people renting out of either by necessity or by choice. Part of the increase in the number of renters can be attributed to the growing number of single people. Recently, singles made up more than half of the adult American population, and that's the first time that that's happened since statistics have actually been compiled. In 2013, the number of renter households in the U.S. increased by more than 500,000, and there's a growing shortage of rental accommodation. From 2009 to 2014, the supply of rental accommodations in the United States dropped by more than 800,000 units, and that shortage is going to continue to grow, driving rents higher and creating opportunities for investors who understand what kind of property to buy and the cities and neighborhoods that are desirable for renters. So to recap, the United States offers you as an investor diversification, a choice of investment targets and vehicles, value for money, growth through immigration, the rule of law, services for offshore investors, and a wealth of data that can help you make smart decisions and avoid bad ones. And while the United States faces geopolitical, demographic, and economic threats, it is uniquely positioned to turn those threats into opportunities. Speaking of opportunities, I'd now like to turn the mic over to Sam, who's going to tell you about some of the opportunities in the United States.
Okay, thank you, Chris.